Moving on to our next company, it is a privilege to invite Mr. Amit Jain, whole-time director and CFO of Shri Ahimsa Naturals Limited, and his team to kindly come on stage and deliver the presentation after completion of the corporate video.
For centuries, nature's flora has served as both inspiration and sustenance, shaping civilizations around coffee beans, tea leaves, and medicinal herbs. Shri Ahimsa Naturals carries forward this legacy by transforming these timeless resources into innovative, modern-day products. By blending ancient practices with cutting-edge techniques, the company preserves and elevates the natural essence of these organic materials. Established in 1990 by the visionary Mr. Nemichand Jain, Shri Ahimsa Naturals stands as a testament to leadership and innovation. A management graduate from BITS Pilani with over 3 decades of experience, Mr. Jain laid the foundation for the company's success. He was later joined by Mr. Amit Jain, an engineering and MBA graduate who currently has 23 years of extensive experience in the industry. Additionally, Mr. Sumit Jain joined the company a few years ago. Together, their strategic vision has been instrumental in driving the organization's growth. The company presents a waste-to-win opportunity, repurposing byproducts of decaffeinated coffee, such as crude caffeine, into caffeine anhydrous natural. Additionally, through its advanced R&D processes, the company has successfully developed methods to extract crude caffeine from tea and coffee waste, as well as green coffee bean extract from crude caffeine. This innovative approach transforms waste into high-value products, creating both economic and environmental benefits.
At Shri Ahimsa Naturals, our journey is rooted in the principles of Ahimsa, non-violence. This means respecting nature, preserving its purity, and creating products that nurture life without causing harm. Since 1990, we have remained committed to this philosophy, crafting herbal extracts and natural caffeine that brings wellness to the world, guided by the gentle yet powerful essence of nature.
Shri Ahimsa Naturals bridges tradition and modernity by employing advanced technologies such as extraction, purification, centrifugation, pulverization processes to ensure the purity and quality of its products. The company has become a leader in caffeine production through in-house R&D and innovation. The key product of the company is consumed worldwide and is appreciated for its ability to enhance alertness, focus, and energy. The product portfolio of Shri Ahimsa Naturals reflects its unwavering commitment to excellence, serving industries like pharmaceuticals, nutraceuticals, food and beverage. The company offers standout products such as antioxidant-rich green coffee bean extract and caffeine anhydrous natural, derived from organic sources like coffee and tea, provides a steady, long-lasting effect with better shelf life and safety compared to synthetic alternative. Beyond caffeine, the company also trades in a diverse range of herbal extracts like senna leaf, ashwagandha, turmeric extract, curcumin, and many more. Shri Ahimsa Naturals has achieved consistent growth in net sales and profitability, driven by its robust business model, global reach, and expanded production capabilities. The company remains committed to multi-dimensional growth by exploring new markets and optimizing operations. By strengthening supply relationships and entering untapped regions, Shri Ahimsa Naturals aims to boost revenue, enhance profit margins, and solidify its leadership position in the caffeine anhydrous natural and herbal extracts industry.
At Shri Ahimsa Naturals, our financial growth has been nothing short of extraordinary. In just a few years, we have achieved 4x increase in the net sales. This reflects not only the strength of our business model to delivering exceptional quality. By scaling our production capacity and optimizing global operations, we have firmly established ourselves as a leader in natural caffeine and herbal extracts industry as a whole.
Currently exporting to 14 countries, including the USA, Germany, South Korea, and the UK, exports account for 95% of the company's earnings. The strategy includes strengthening local connections and entering untapped markets, further expanding their global footprint. Shri Ahimsa Naturals operates a state-of-the-art production facility in Jaipur, certified with ISO 9001, GMP, ISO 14001, HACCP, Halal standards. From raw material procurement to final shipment, their advanced technology and rigorous quality control ensure unmatched consistency and excellence. The trust of global customers is reflected in the company's consistent satisfaction rates and repeat orders. The upcoming manufacturing facility at Savartha will increase production capacity multifold, effectively meeting growing global demand and reinforcing the company's commitment to innovation and excellence.
We are building a brighter future. Our expanded facility in Savartha will boost production and meet global need. With our new state-of-the-art facility, we plan to increase the production capacity to 4 times our current capacity. We are committed to innovation and delivering the highest quality products. As we expand globally, we are excited to create lasting value for our customers.
The company's new state-of-the-art plant shall be designed to meet rigorous global standards, including USFDA guidelines for production of caffeine anhydrous natural and green coffee bean extracts, and it will significantly enhance its capacity, extraction efficiency, and waste minimization. Alongside this, the existing production line remains operational, focusing on research and development of new products as per the market need.
We have grown rapidly by expanding into new markets and improving our operations. This has made us trusted name in natural caffeine and herbal extract. We are focused on innovations, sustainability, and delivering great value to our clients worldwide.
The success of Sri Ahimsa Naturals is built on the dedication and expertise of its exceptional team. The quality of its products and customer service have established strong partnerships worldwide, reinforcing its reputation as a pioneer in the field. With a vision driven by innovation, sustainability, and customer satisfaction, Sri Ahimsa Naturals is poised for significant growth, combining advanced technology, unwavering quality, and responsible practices. The company is paving the way for continued success in the global organic extracts industry, setting new benchmarks in excellence and leadership.
Yeah. Good morning, everyone. It's my privilege to address such a distinguished group of investors and investment companies. Let me take this opportunity to introduce Sri Ahimsa Naturals Limited. We are the biggest manufacturer of natural caffeine in Asia. Thank you, Capsight, for giving us the platform to present before you post-IPO. So we just got listed on April 2nd this year, and we raised 74 crores in NSE Emerge platform. So thank you, NSE Emerge platform as well. So I'll take you to the journey where, how we started. My father, Mr. Nimichan Jain, completed his education from BITS Pilani, and then he went back to Assam, the native town, and there were a lot of availability of tea waste in Assam, where we found out that with a lot of research and development, he found out that caffeine can be extracted from the tea waste, and that was the first unit all over the world where it was established in 1978, where caffeine was extracted from tea waste, and it was a journey of 10 years, and it was a good success out there. But after the terrorism issues in Assam during the 1988-89, so we entire family had to leave Assam overnight, and we relocated to Jaipur. So that's where Sri Ahimsa Naturals Limited started in the year 2000, 1999-2000. And I joined the company in 2001. I completed my BE and MBA, and I worked with the financial institution for a year, and then I back to Sri Ahimsa Naturals Limited. So initially, there were a lot of funding difficulties with the company, and it was a helter-skelter ride for 8 to 10 years, and we grew like from 1 crore to 2 crore top line to 5 crores, 10 crores, and now we achieved 95 crores last year, and this financial year we closed at 60 crores, which is going to be like 125, 130 CR for the next financial year, March 26. So in terms of products, we do natural caffeine. Initially, in Jaipur facility, we started with the natural caffeine processing, which is basically a part of, there are various decaffeinators all over the world, including like Mexico, Vietnam, USA, Europe, many countries in Europe, and they decaffeinate the coffee beans and tea, where there is a byproduct called crude caffeine, and that crude caffeine we import, and we make it, we process it in our factory, where we make it as a food and pharma grade and sell to various beverage companies and nutraceuticals, food companies, cosmetics, and pharma companies. So similarly, the breakthrough arrived when we, in somewhere in 2018, where there was a crude caffeine, where there is one more product called chlorogenic acid, which is called green coffee bean extract. So that was 50% material present in the crude caffeine. So we developed the technology to separate that chlorogenic acid from the crude caffeine, and we did all the R&D, and within 1 year we did the capex of 13 crores, and we successfully separated that product and make it 2 products for which is commercially viable. So we changed the dynamics of this green coffee bean extract, where there was no input cost for us. We paid only for the crude caffeine, and we developed this product separately without input cost. So what we do is we just make it chlorogenic acid 40% after separation. We get into the enrichment process, and then we sell it as a 50% chlorogenic acid. So this all industry is catering to, like caffeine is in the nutraceutical space and food and beverage space. Green coffee bean extract is used for the weight loss supplements, which is also catering to the nutraceutical space. So similarly, what happened is we are already in the vendor list of so many good brands like Herbalife, Muscle Tech, and there are many US and European brands. So we thought, why not to add few more products in the baskets, like curcumin extract, ashwagandha extract, garcinia, senna, curcumin, bacopa, like which we call brahmi, and tribulus. So there are many other herbal products these big brands are buying, like they buy 50, 100 products. We are already in the vendor list of these good, all the good companies. So we started pushing these products, which we are not manufacturing though in our current facility, but we are coming up with the capex, and we are setting up a new facility where we can get these manufactured in our own facility, which is right now we are doing at a Bangalore facility, which is doing the job work for us. So these products are basically, herbal extracts also is a huge industry where we can add like 50 different products which are marketable in the nutraceutical industry as a whole. In terms of certifications, as I told that we are already in the vendor list of so many big brands and customers, which is totally export based. Like we are 100% UU unit, and we are totally export based. So these all big companies have a huge requirement of auditing the facility and all the certifications required. So we have all the certificates like ISO 9001, 22000, 14000, HACCP, halal, kosher, FSSC 22000, which is very stringent. Like they come for the facility for 3 days and they audit the facility and then they approve as per the regular process what we are following. So that's the most stringent one. So we in terms of certifications, we are very much complied with all the global needs and certifications. Our management, basically, as I told Mr. Demichan Jain is the managing director of the company. I am the whole-time director and the CFO of the company. Our team, basically, we focus on research and development, which is the most important aspect of our growth. So our R&D team is like, we have 7-8 people who carry the same vision what my father and myself, we carry the same vision, everyone in the management, that research and development is very important. All the technology upgradation is very important. Plus, because that's where we can get into the cost reduction. And we are the cost leaders in the industry because of our expertise in the research and development and continuous upgradation. We work on waste to value proposition. So we talk about the crude caffeine, which is again the waste of decaffeination process. We developed this one, green coffee bean extract, again we separated. We also developed, there is one more product called coffee waste, which was available in Europe for 40 years. And there's a market leader in the natural caffeine. And they were throwing the coffee waste for last 40 years and they were paying the disposal charges. So we just had the meeting with them 5 years back. And I just told them that, okay, we'll pay you 40 rupees for this material in terms of euro. And we will process the material and we will give you back the 50% of the material and other 50% we will utilize. So that's where within 4 months we developed the technology with our R&D and expertise. And we set up the unit in 6 months and we successfully did it, all the productions with the coffee waste, which is like 8% caffeine content. We make it to 99% and then we further process it. So similarly, the coffee sludge is there. So again, we tied up with the supplier where we bought the coffee sludge also. Within the same unit, we separated the caffeine, which is like 8 to 10% again. And then, so that material basically is very low cost for us because it's a free of cost because they were throwing the material and paying the charges in Europe. So that input cost also increases our EBITDA margins again. Because that's like when we buy the crude caffeine as like 3,000 rupees, that cost us to say 600, 700 rupees after the processing of material. So these are the basically what we are talking about, the cost leadership and the quality and certifications. These are the basically entry barriers for the other industry as well. Because this is a very niche industry. Like caffeine there are not so many manufacturers for the natural caffeine process. Synthetic caffeine, obviously there are so many manufacturers in India and China as well. But in natural caffeine, it's a very niche industry. There are 2 types of people. I mean, one is like who is doing the decaffeination as well. Decaffeination plus they are processing in the same facility. And second is pure play processor like us. So there are 3-4 major players who are heading the industry. So that's where we are getting the market share. We are increasing our market share in that sense. So like Mexico, they are reducing their market share. We are increasing our market share. So they are the pure play processor. Again, we think of the decaffeination also in coming future going forward. Global quality is quite important because like for example, Coca-Cola or maybe Red Bull, they won't buy the substandard product, say $20 cheaper. If they buy it $50, they won't buy it $25 even if there is a quality substandard. So they will audit the facility. Everything has to be complied. Then only they will place the order. So that's again a big entry barrier. So quality is the most important aspect for getting in the industry. Again, being the niche industry also is considered to be a big entry barrier for other companies. With the capex, big capex involved in the industry, plus high capital margin intensive. So that's again, it's a big entry barriers for the companies. Now I'll come back to the market. What is all about the market of caffeine industry? So there are 2 types of caffeine. One is synthetic caffeine and the natural caffeine. So synthetic caffeine, you must have heard the name of Aarti Pharma, who is doing good in the synthetic caffeine. So synthetic caffeine, the total caffeine market size is 30,000 metric tons. It's not the published data as such, but what we analyzed, looking at what are the productions of different companies, what are the crude caffeine supplies. So we just segregated and in-house developed this market trend that 3,000 tons is the total market size for the natural caffeine and 27,000 tons for the synthetic caffeine. But the synthetic caffeine is 1/3 of the price of natural caffeine. So it's like in terms of value, 33 to 40% is the natural caffeine market in terms of value. In terms of quantity is just 10%, which is again growing. But the basic difference is people prefer natural caffeine because it's again a preferred source as being as a natural. It has a lot of other advantage over synthetic caffeine. So when we use in the material, there is a more effect, it's stronger. So the purpose of energy drinks manufacturer, where they use the caffeine is the main ingredient for the providing the energy and focus. So that's natural caffeine is quite preferred. And as compared to the cost in the raw material input cost for them, it's like 50 paisa for a 150 rupees bottle in the energy drinks. So again, that's a very minuscule cost for them vis-a-vis the effect and the purpose of that material to provide the energy. So natural caffeine is again long-lasting. There is a consistent 6 hours effect in the focus, but synthetic caffeine start crashing. But the availability, synthetic caffeine is just used because there is not as much as natural caffeine is available. So it is growing at a CAGR of say 5%, and we are again growing with the CAGR of 5% with the decaffeination industry. Vis-a-vis, we are getting the market share from other pure play processor of natural caffeine with our advantageous position as cost advantage and quality. What now coming to the road ahead, we have raised capital of 74 crores. Now we are coming up with the capex of 50 crores with the IPO raised fund, which we are utilizing for 35 crores from the IPO raised funds. And this capex is going to be, so our capacity right now is like 240 metric tons for natural caffeine and 240 tons for the green coffee bean extract. But it's going to be 700 tons for the natural caffeine and 300 tons for the green coffee extract, including those herbal extract products what we are doing at outside getting the job work done. So we will be able to produce in our own facility where we will get additional cost advantage, and which will help us to increase the market share vis-a-vis the top line and EBITDA percentage as well. So our financials have been quite consistent. Let me get into finance. So our financials has been quite consistent. We are for 5 years, we are getting a growth of 30% with the caffeine, green coffee extract and other herbal extracts. EBITDA, we are in last 5 years we are at 30%. So EBITDA also, if you can see, this H1 already we declared yesterday. We just uploaded in the website that we are closing at 60 crores of the top line, which we are expecting at 125 this year. So it's again a 25% growth from the last financial year, and with the EBITDA percentage is little higher from the last half yearly results. So it's going to be 20 crores approximately the operating margin, which was like 16 crores last H1. So in this, with all the R&D and with all the cost advantages and with the growth story, I would just like to invite you all investors to be the part of the journey where we can grow together. So thank you very much.
To share his insights with us, I now invite Mr. Aditya Goel, a member of investment team at Matteron Investment Advisors with over 9 years of diversified experience and an academic foundation from BITS Pilani and Accelerate Jamshedpur.
So I'm told there's a short break out after this presentation. So all this talk about caffeine should set you up nicely for a cup of tea or coffee at the other side of this. All right, so the presentation is up. Standard disclaimer, this presentation is not a recommendation of any sorts. Before diving in, I just wanted to demonstrate wherein caffeine is becoming a part of our lives in different formats. So you can see caffeinated chocolates, gummies, even face masks. And all these products are priced at 300 or upwards, having 50 grams to 100 grams of, 50 to 100 milligrams of caffeine, which amounts to less than 50 paisa per product. So the cost is quite less for natural caffeine, and hence it is safe to say that caffeine is here to stay and in fact grow in different formats. All right, diving in, So this graph should make the IPO investors quite happy. The company has given good returns, and in fact, in the last 2 days has performed very well on the back of some good half-yearly results. The revenue have been growing steadily. Margins are great, 30% plus of EBITDA and 20% plus of PAT margins. Companies net debt free. The promoter shareholding is good at 69%. ROE, ROC have softened a bit on the back of funds raised recently and some working capital increase. Operating cash flow to PAT decreased a bit in FY24 to 30%, but has regained in FY25. The number 61% that you see is adjusted for the proceeds from the IPO. So Mr. Amit has done a great job covering about the industry, so I'll skip some part of it. But just to give you a sense of the market, caffeine anhydrous natural or CAN is a market of about $2 billion USD estimated. There's not a lot of information like Mr. Amit mentioned, and about 30% of it is natural caffeine. Green coffee bean extract is a bit smaller market, about 300 million. Both these markets are expected to expand about at 5 to 10% CAGR over the next 4 to 5 years. The end use, of course, like we heard, is into energy drinks, personal care products that we saw, nutraceuticals, sports industry, and nutraceuticals and pharmaceuticals. So it's good to understand what the value chain is before diving into the business. Like it was explained about how the value chain works, there are major decaffeinator companies globally. Some of the big names are Nestle, Coffee Company, which is in Germany, CR3 in Germany, Swiss Water in Canada, Descamex in Mexico, and then coffee chains like Starbucks and Lavazza, which have their own decaffeination decaffeination facilities. Interestingly, Coffee Company and CR3 also have their can producing capacities of 1,500 ton and 600 tons per annum. So these companies are basically the raw material suppliers to manufacturers like Sri Ahimsa for can and GCE. Sri Ahimsa, of course, is one of the companies. Other companies are OmniActive, Botanic Healthcare, Nutriventia, Natura Vitalia. Applied Food Sciences is based out of US. Now, there's not a lot of public information about the capacity, so that becomes a bit hard to compare. Diving into the company financials, the growth has taken off post FY21, as you can see from the chart. FY23 seems to be one of where probably post-pandemic there was a pent-up demand, which led to increase in volume and value both, after which the demand softened. The margins, of course, were one off again in FY23 because of the demand, which are now at 30+% levels and are expected to continue the same. In terms of the product share, GCE and caffeine are the major contributors. Herbal extract is yet to take off, which I think the company is focusing on. In terms of the sales mix, the company uses two methods, one direct to end customer and one to reseller. The end customer growth seems to be stable. However, the reseller share of sales seems to be volatile. Breaking down the working capital, we can see a sharp increase in the working capital in the last 3 years. If you notice the red line, that's payables, so that's close to 0 days, which means the raw material is purchased in cash. So the entire receivables and inventory goes into the working capital cycle. Now the increase can partly be also a portion to the FY23 jump and probably the management planning the procurement and production on the back of the demand. However, the demand softened and then we can see an increase in the inventory days and the receivables. A big part of the inventory days is the finished good days, which we can see is now 76 days, increased from 23 days in FY22. On the receivable side, the receivable days have increased from 25 to about 100 in FY25. So these will be good monitorables going forward and on how these numbers will be managed and improved by the company. Now the key events are CAPEX, which was highlighted. The formation of subsidiary Sri Ahimsa Healthcare in 2022. Now why this is important is because as part of the Rajasthan Investment Promotion Scheme, the company can get some incentive on CAPEX or turnover or interest in the new capacity that is coming up. And then the additional capacity which has been raised recently, which was approved to be raised recently through the preferential issue. So we know what the capacity expansion is going to be. As per the detailed project plan, the timeline is a pilot batch by March 26. The payback period the company expects to be 1.75 years. IRR is 57%, which is adjusted to 31% with some sensitivity to RM and finished good as per the DPR itself. The current shade should be the equipment should be arriving at the plant as we speak. So that is probably a monitorable that we can discuss with the management. The total planned capex of about 61 crores, out of which 35 crores are coming through the IPO, and the remaining was planned through internal accruals and debt. Recently, the preferential issue was approved for about 32.6 crores, out of which 2.3 is coming in through equity, and the remaining is coming through warrants. Interestingly, there was an OFS part in the IPO, and in the preferential, one of the groups taking the warrants is the promoter group, wherein Mr. Nemichand Jain and Mr. Amit Jain are taking 5 crores each as part of the preferential issue of warrants. So since there's a limitation on the comparables of the company, what I've tried to do is compare the business models with different companies in the same value chain. So the first set is a comparison of a bucket of 5 companies in specialty chemical manufacturing process, which are into organic manufacturing, kind of at a similar scale to Sri Ahimsa, profitable and also having a decent growth in the revenue in the last 3 years. The next is Aarti Pharma Labs, which produces synthetic caffeine. Then Omni Active Health Technologies, which produces natural caffeine and herbal extracts, but is unlisted. Then Botanic Healthcare, which is into herbal extracts, which is also unlisted. And Swiss Water, which is a Canada-based decaffeinator, which is listed. So just a summary of this is that the current business model of producing natural caffeine is basically one of the high margin business models. The second high margin is herbal extracts, which is a positive sign since the company is planning to expand into that. The working capital days seem to be higher for this business model, which we can see in both Omni Active and Sri Ahimsa. On the scale part, decaffeination can give a lot of scale, which, as Mr. Amit mentioned, if the company plans to get into, that can help the company get into another scale. Taking over from the previous slide, the company's new plan, the new capex that is planned on a land parcel which is more than 10 times the current land parcel, and only 50% or less of that is being used. So that gives ample room for the company to expand in future. So the key positives are it's a niche industry. It requires a lot of technical and commercial expertise, which Mr. Nemichand and Mr. Amit Jain have been instrumental in doing that, and a strong in-house R&D which has resulted in a much higher efficiency. Growth levers are, of course, the capex and the high purity GC. So currently the GC produced is either of less than 50% purity, or it's purified more on an outsourced basis. If the company produces that, then that gives a lot of bandwidth and a lot of demand. Tailwinds are consumer behavior shift towards natural substituents and the rising TKF preference, which can actually help the company in more RM procurement. And the opportunities are expanding the herbal extraction and the large area availability. The concerns are concentration risk towards suppliers and buyers. So if you see, the top 5 customers account for 85%, and the top 5 suppliers account for 98% as of FY24. The 6 months FY25 results, as shown in the DRHP, were a bit better. So it would be good to see how the company manage that further. Capacity utilization in both CAN and GC has gone down. So one of the key monitorables would be to see, once the new capacity comes up, how does the capacity ramp up? A limitation for the investors is that there are not a lot of comparables, so to corroborate the information coming in from the company would be a bit challenging on the investors front. We talked about the key monitorables. The other key monitorable that we didn't talk about earlier is how the working capital will be managed once the new capex come in, the capacity utilization increases, and given the current high working capital days. A few key trends. So there's a rise of decaffeinated coffee preference. In US alone, in the last 1 year, decaf increased 33% from 9% to 12% of the overall coffee consumption. Demand is actually outstripping supply in countries like Colombia. So what this presents is an opportunity for the company to broad base the RM where we saw concentration risk, and also a potential to decaffeination, get into decaffeination like Mr. Amit pointed out. There's a rising preference for caffeine-free stimulants. While this may sound a bit negative, but it actually is an opportunity on the herbal side of it. Other watch points include there are some minor auditor opinions regarding purchase of land for 21 lakhs in 23, for which the agreement is pending, and insurance claim of about 60 lakhs done in FY24, which is pending for approval, which are highlighted in the auditor's opinion for everyone to reference. That's it. Thank you. Hope you think about caffeine while you have a tea or coffee outside.